Welcome to the third part of the cryptocurrency course. This section will be very important as I will present you the technical analysis. So we will go straight to the platform. See you there. When we first get on bittrex.com, you notice they're showcasing multiple different coins. One that we saw earlier, New Economy Movement, telling the price in BTC, in Bitcoin, because like I said, when you register, you need to import Bitcoins in order to trade the other coins because they are paired like this. So markets are divided by Bitcoin markets, Ethereum or ETH markets, and USDT markets. So you have three options of which coin to import in order to trade the other ones. Okay, so Bitcoin market being the biggest, if you import Bitcoin, you can trade all of that. Also ETH, all of that, and USDT, which also stands for Tether, Tether. You can trade all of this. So if we click, for example, on the first one in the Bitcoin market, okay, we will use this one as an example. We see the last price, the volume, the bid, which I remind you is if you're selling, the price you're going to get, and the ask if you're buying, the price you're going to get in Bitcoin. And the 24-hour high and 24-hour low. So I showed you a screenshot in the previous videos showing the time frame and this platform. So right now, what I'm going to do is describe how to use everything, and then we will hop on the studies and the tools on how to use them to take trades. Okay, it does not matter on which coin you are, technical analysis will remain the same. All right, so right now it's starting us at the 30-minute time frame. Okay, we can go at 15, 5, 1 minute, 1 hour, 1 month. Okay, so you can see the start of the history of that coin. You can scroll with the mouse to zoom in, zoom out. Starting in 2015. So this one is relatively new. 1 month, 1 week, 3 days, and 1 day. Okay, when you switch time frame, it means that for one candle, it is equal to the time here. So if I'm at the 1 day time frame, it means that this candle represents 1 day, that this one represents 1 day, 24 hours, 24 hours, 24 hours. If I switch to 1 minute, each candle here, even the super tiny ones, are worth 1 minute of fluctuation. Okay, so you can see that during some minutes is very volatile, and then it stops, and then very volatile again, then it stops. So if you take, for example, the weekly one, this is each candle represent 1 week. All right, so if you're trying to take trades on a day trading perspective, you might want to start with the daily chart, okay, and look for breakouts. So this is how to use the time frame tool. I will go over the chart tool because there's various forms of charts, okay? you have the candle, which is this one. Okay, the green candles mean it went up compared to the previous candle. Okay, and when it's red, it means it closed lower than where it started. Okay, so let me just give you a quick scenario of how all this works. So this candle closed here, a red candle. Okay, bearish red candles, signifying that it closed lower than where it started. So it closed here. This candle, green candle, opened here. It went all the way to here, which represents the low of that candle, and pushed high all the way to here and retraced slightly lower and closed here. And that close happens to be the next candle open, and that fluctuates, and that represents 1 day of fluctuation. Okay, so when I switch, I'll zoom out slightly. If I switch to bar, it's the exact same thing. Look at the chart is exactly the same. The only difference is our green candle that was here is replaced by a bar. So the first bar that sticks out is the open of that candle, the opening price. And the lowest line is the low of the candle. It's the lowest point it went during that day. Okay, so it's the 24-hour low technically for that day. Okay, 24-hour low. And pushed, went to here, retraced, and that's the 24-hour high, and came back to close here, and the next one opens up here, pushes, comes back and closes here. Okay, so you can see that it's the same thing. Okay, my most recommended one is this one because you have a much clearer picture and faster, much faster than going with bars. Okay, because you got colors and it's much easier to see visually. You do have colored bars, but that is to your discretion if you want to use them. You have the line, which removes the high and the low aspect and removes a little bit of the noise. Okay, builds out a much more clear picture, but at the same time, it's not perfect for trading because it removes a lot of information from the candles. Okay, so this is useful if you want to have a clear picture on, for example, the monthly, or if you want to have a clear picture on a more choppy chart. Okay, this looks quite clear. It's trending up. Okay, there's a trend up going on. You do have this candle also. Doesn't have a big difference between the normal candles or the first option. It's just that you have this hollow, so it's just for your choice. And this is exactly the same thing as a chart with a line simply, but that's called a mountain chart in finance. Simply putting a slow fade below, easier for the eyes. So right now we went over the different charts. So like I said, this one is the one I recommend. Gives a much more clear picture. I'll switch back to a 1 day chart. I'll keep studies for later. Okay, you have a couple different options you can use here. I would recommend going to the dark theme because it's gonna hurt your eyes much less. We all know that bright, very bright colors, fixing at flashing charts will hurt your eyes. So going over a darker theme or scheme is going to be better, and you can change time zone also according to your own time zone. I'll go over this here. So when I point out, for example, this candle on the top here, when you look at O, L, all that, so the O stands for open, the L stands for low, the high, or the H, sorry, stands for high, the V for volume. So that's important if you're just trying to look for the details of a specific candle. You just move the crosshair to that specific candle. So right now, going to the tools. Okay, you can select none. That's basically what I have at the moment right now. So no crosshair. You can select the crosshair, which is the one I recommend just to surf across price. Now you have the Fibonacci tool, okay? A very popular tool that can help you take trades, and I'll explain you why. Okay, the Fibonacci tool is a ratio tool. Okay, basically when the market is trending up, you just take the Fibonacci tool, you click on the low, okay, the lowest point, to the highest point of your trend at the moment. Because if you're trying to buy a specific coin, you would like to buy low. Of course, it's logic because your profit margin will be bigger. So how do you know where it's a potential good zone for entering a buy? Because you're not trying to buy high, because it could just fall and then continue up while stopping you out. So by using this tool, you have three major levels of percentage levels, which represents price levels, where the price could retrace to and bounce from. Okay, so for example, if price now starts falling and I'm looking for a buy, I will start to look for a buy around here because that's a valid retracement. Okay, 61.8 being the most popular, and then it's the 50, and then the 38.2. So inside this zone, there would be a potential good buy in there. So I'll take my pen just to show you another example. Imagine it tops here. You need a top and a bottom. You drag the tool from here to here. And then if it starts dropping and bounces off here, that was a potential buy for you, okay? And then it continues up, all right? So this is how you can use that simple tool to determine where retracements are valid, where you can enter another buy, okay? That can be useful for taking day trades, swing trades, position trading, to even add on to your existing position. And you just, if you want to delete a certain tool, you just right click on it, okay, and it's going to disappear. You can add vertical lines to determine a specific candle or a specific period, okay? If you want to, for example, determine a specific week or a 7-day time lapse, you can place it like this and know that this represents 1 week, 7 days of fluctuation, okay? That, so you can visually look at price that can help you to draw on your charts. There's the ray also, okay, that can be very useful. That is what we call also a trend line. Okay, when it's trending up, it just means there's a line starting from the bottom that connects all the way up. So right here, that's our bottom, then it connects here, then it connects here again, almost connected here, but that hints that when it connects, you have a possible trade. Okay, I'm gonna take my pen, show you. So you have your first touch here, second touch here, then you have a third touch here. So that is a possible buy for you. Okay, because you don't know if there's going to be a trend line until you have a second point. Okay, so you cannot really take a trade on the second point. Okay, not here, not here. So the third point, if you see it rejected, so you see price going below and then retracing to close above, you have a possible buy opportunity, and that's what happens. Okay, same scenario can apply to trends. Sorry, I'll delete that. To trends going down. Okay, for example, okay, if I zoom in, okay, here lines, I'll make them connect. Okay, so here you see again the line being a possible sell opportunity when it connects. All right, so trend lines apply to both uptrends and downtrends. Okay, rectangle that I will use from something like this. So I will give you a clear example of this rectangle. When you see a rectangle forming, meaning price goes up and down into a certain range, just like the trend lines, you're looking for a breakout. I'll show you that right now. So the ray, for example, you have it here. Okay. Breakout trading is what you're trying to do as a day trader while trading cryptos. And by breakout trading, the definition is very simple. If it breaks something that is established, okay? So this trend line is established, and this box is also established because price was, constrained into a range, seemed like it could not break higher. What happens right here, by watching the price, you see that it broke this aggressively, giving you a possibility for about half of a day. So good for day trading because this candle is 1 day. Broke the rectangle, gave you a certain amount of money there because it broke. Because you know that the traders are looking for a break. So when it breaks, a lot of traders jump in. Okay, same example here. Look at here, it broke the trend line first, and then it started accelerating. Okay, that can hint you that there's chances it breaks the box also. And it broke the box, and traders jumped in and pushed the price higher. So by drawing boxes around prices that seem to constrain into a small range. Okay, here also, you don't need to overcomplicate boxes like this. If you see price not going up or not going down and just scaling basically, and it looks like a box, draw a box, and when it breaks, could be to the upside, could be to the downside, you have a possibility, because here it broke to the downside and it gave you trade opportunities. Okay, for example, to manage your risk, if you really thought, okay, that this would continue a lot more to the downside, okay, after it broke here, and it doesn't, it retraces, and it's not really the trade you were expecting. When you manage your risk, you can decide to just close that trade because what you thought would happen did not really happen like you expected. Okay, or you can have a stop loss, so deciding that you will close your order with a pending order above here, deciding that it'll stop you out if it does go back to this point. Okay, that way you control the loss. So if this price is 11,41413, you can put your stop loss at this price, and if it hits that price, your trade is going to be out. However, you will not hold a losing trade forever. Okay, so that's how you can manage your risk. So you have three possible ways now to make money: is the Fibonacci tool of a retest to the 38.2, the 50, or the 61.8 percentage. You have the break of trend lines and the break of rectangles. And you can pair them up like I just showed you right here in order to add more value to your trade, because there's multiple things telling you that you could be right. Okay, while trading cryptos and altcoins, especially on a day trading and even swing trading perspective, you have to be looking at breakout trades. These will be the most profitable trades for you, okay, as they're easy to paint out and you simply have to wait for the right opportunity. Okay, you draw on your charts what you're looking for and you place your orders. What I will show you now, okay, you also have the option to simply clear drawings. So that's what I'll do right now. You also have, okay, that's your crosshair I was talking about to navigate inside the price. Annotation, if you'd like to say something, you can have it there. You should just simply right click on it to delete it. Horizontal line. So now we'll tell you the concept, how you can use horizontal lines. Is what we call support and resistance. Okay, support is like the floor, and resistance is like a ceiling. So when you see price turning around at a certain point, like here, and falling, this point represents just like as if someone jumped and hit his head against the ceiling and falling down. The ceiling acts as a resistance. And now when that person falls back to the ground or the floor, that serves as support. If you break the floor, that floor is not anymore a support. it becomes a resistance. Okay, because going back to it is like going back to the ceiling. Okay, and if you break a resistance higher, it's not a resistance anymore, it's a support. Okay, so the concept of support and resistance is very simple. It's when price reverses and refuses to continue after a certain price level. And when you see that, you can simply draw a line. Okay, I'll show you different examples. Like here, you can see price having trouble going higher. Here, price having trouble going lower, then finally breaking. Okay, so support and resistance, a very, very, very used technique. And it works at this with the same logic as breakout trades, because when it breaks, you're looking to go in that direction. Okay, because right here, a possibility, okay, a possibility you have here is that maybe price will end up forming a rectangle right here. Okay, and a breakout of the rectangle would also mean a breakout of the support or the resistance. Okay, in this case, the resistance, and in the lower case, the support. All right, so everything about breakout trades. Because when you have huge volatility coming in a certain crypto, it makes big moves and you're trying to catch the big moves. Okay, when it makes 30% in a day, you're trying to catch that 30%. Okay, and it will happen as a breakout trade because it's going to be very aggressive and it will break all structures. Okay, and you can go longer. I wanted to put a horizontal line. You can go far to put support and resistance to add future price expectations. So if, for example, I have a of course resistance here, but if I have one right here, like I pointed out, if this breaks, it could potentially mean it's going to go to the next resistance. Okay, and don't get too caught up in identifying super tiny support and resistance, because your chart will look completely useless because you're going to have lines everywhere. Focus on the main price levels where the price rejected it. Okay, all in the logic of breakout trading. Okay, you also have this, which serves also the same purpose as the ray. So the ray is a bit more simple to use, so I would focus on the ray. You can also add just a segment. Okay, instead of a ray that just continues forever, you can add, for example, this only and move it like you want. Okay, and right click to delete them. So serves as the same thing. And an ellipse to point out a specific zone. So you won't necessarily take trades based off an ellipse, or in here the objects or the tools that will serve you directly to take trades are the Fibonacci tool, the ray, the rectangle, horizontal line, segment, of course line also, but I said it's the same thing as ray. Segment, and that's it. Okay, ellipse is just to point out certain things on a chart if you're planning your trades in advance and you're looking to build a plan that you need to see visually, or if you're trying to show someone something visually. So of course you can change the style of the ellipse and the trend lines. Okay, trend lines or support and resistance. Okay, you can change multiple things, how they look, the color also, by having zones that are more important than others, where you have a major reversal. Okay, I'll show you an example. Okay, for example, I would put this right here as a very strong zone of support, because it fell aggressively to it and then bounced aggressively and took a long time to come back. And when it broke, it continued down. Okay, so it broke the support, so that support becomes now resistance, and we're looking lower. Okay, until we got another break higher. Okay, hinting the start of an uptrend in this case. All right, so I'll clear everything. I'll go to none. Okay, I'll zoom in again. Now I will show you the studies. Okay, studies here, there are a ton of studies available. I will go over the ones that are going to be the most useful to you. Okay, I selected 8 studies that are going to be the most useful to you. Okay, first one is volume, but it's already integrated to the chart. All right, so volume here tells you how strong the sellers or the buyers are at a certain point. Okay, so at the top here, when it reversed, when you look at the volume here, we could really see a huge spike in bearish volume. Okay, so meaning volume that was sellers. Okay, big sellers volume. And after this candle, you can hint by looking at the rest that this is a powerful reversal here. Okay, because you got a huge amount of sellers that just came in. So instead of trying to fight them, simply join them on the way down, okay, as a seller. And then when volume slows down and now picks up aggressively right here, this is our rectangle, I remember you. You can hint a possible continuation to the upside. Okay, so you'll have big spikes in volume. Okay, here, and that's the kind of situations you want to take. Okay, because by yourself or with a couple people, you cannot move the market this strongly. You have to wait for a ton of people or very big sellers to go in, and then you notice they went in by watching the volume, and then you go in confluence with them. The other study is the average true range. Okay, it is an indicator that when you open it, it's going to show below the chart. Okay, so the ATR, the average true range, is an oscillator that is going to hint you and guide you about if the specific coin moved too much in one day in one direction. Okay, the ATR will never leave this range. Okay, so when the ATR hits the top of its range, you can hint that there's a possible sell coming in, and that's what happened right here. And then it failed. Then when it hit the bottom of the range, you can hint a possible buy coming in. That's what happened. And when it hits the top of the range, you can hint a possible sell. And you see the volume here and the ATR gave you the same indication. The volume just told you there's a ton of sellers that just came in. And the ATR is telling you this coin moved too much for that period of time. You don't need to focus on what period of time. I can change a time frame and the ATR will adjust itself automatically. Okay, the study will adjust itself automatically. So when it drops back to the low of the range, you can hint a possible buy, and that's what happened. And the volume confirmed it to you later on. All right, so this is a very simple tool in oscillator, or what I call an up and down indicator. However, not every ups are going to be a good trade, and not every down is going to be, not every low is going to be a good trade. So you need to pick up trades that multiple things tell you go in confluence, because when you use the tools at the same time as using studies, you increase your chances. It's basically having multiple analysts telling you the same thing. Okay, the next study I selected is the Bollinger Bands. Okay, the Bollinger Bands are price averages that will create a channel that will try to constrict price. And that channel serves as a dynamic support and resistance. What do we know as support and resistance? When price hits a support, there's good chances it reverses and goes in a buy. And when a price hits a resistance, there's chances it reverses and goes into a sell, right? So the Bollinger Bands are a form of moving support and resistance. So the channel will go for all the history of the coin. So when it hits the bottom of the channel, there's chances it reverses back to the upside of the channel. Okay, and when it hits the upside of the channel, there's chances it goes back to the low of the channel. Okay, the bottom of the channel basically. And the middle line is just an indication of how strong that could be. So when it when it rejected the low of the Bollinger Band, or the bottom line, it went up to the up line. However, it retested on the middle line 2 times, showing us that there's chances it's not going to go back to the bottom line, and it's going to the top one more, or for now at least. So here you have a drop also. So just to point certain things out, you have the top of channel here, you have the volume here, and you have the top of the ATR. you have three things telling you there might be a sale there. Okay, the best quality trades are going to happen when you have multiple things telling you the same thing. Okay, I hope you get this. It's very, very important, and it's the core of anything you'll do in trading. So the next study is going to be the fractal chaos oscillator. Okay, this is an other oscillator, a much more short term. Okay, much more short term. However, it still has opportunities because it goes with the same logic as the ATR. Okay, there's an established range of the indicator, and if it goes to the upside of the range, there's a possible sell, and if it goes to the low of the range, there's a possible buy. Okay, I will take my pen again and show you. You have now four things telling you about the same time that it's going to reverse here. Okay, this one also, you have bottom here. You don't really have the volume there to prove it, but you have it slowly after. You have this and you have this. Okay, but this one's the perfect example right here. Okay, so now we have four things telling us, four things only considering the studies. So if this point is also forming a trend line that would, you know, this point it rejects from a trend line that came from way up, that is also another point. But now we're focusing only on studies. The next study is going to be the MACD. Okay, the MACD stands for moving average convergence and divergence. So the key word here is moving average. Okay, it's going to make average of the price and give you an again oscillator with a range. So when it goes to the upside of the range, there's chances it's going to become a sell. And same thing for the low of the range. Okay, notice here. Okay, again, when I take my pen, we have 1, 2, 3, 4, 5 things telling us it's going to reverse there. So you see how studies clearly show you, and you know, show you a straightforward vision of the market, perception of the market, as of where you could have good trade opportunities. If you have nothing on the studies matching and the technicals are a bit off, so meaning the lines are supporting resistance or rectangles, and Fibonacci also, then your trade is not that high in quality. You could have half of the things telling you it's a good trade and the other half telling you it's a maybe not a so good trade. So there you are the judge in which trades you want to take and which ones you want to avoid. Next study is the moving average. Okay, red line here. I deleted the Bollinger Band just because it just takes a big portion of the visual, and I just want you to focus on a specific line. So the period I'm gonna recommend you is 50, and put this at exponential. okay, as it will react faster to the price. So just to tell you how what we call now an exponential moving average, so short for EMA, short for exponential moving average. When you set the period at 50, each rectangle right here is representing a period. So what this EMA is going to do, it's going to do the average of the candle closes, okay? So the C here, all the candle closes for the past 50 periods. Now you might say, okay, if I go to the 1 hour, it's going to be the same thing. Periods are going to be automatically separated and the EMA will calculate automatically. Okay, so you have just to set your tools on one time frame and then navigate to whatever time frame you would like. Look at it, it shows you the tools the same way. Okay, so going back to here on the daily, the moving average, how do you use it? The answer is pretty simple. It is a moving support and resistance that is available to you for breakout trades. Okay, so when it breaks that line to the low, there's a potential sell going on. And when it breaks the EMA to the high, it means you have a potential sell, a potential buy. Okay, and the EMA is also there to show you a much more, clear picture of what the market is averaging. Okay, sometimes the market is going to look very choppy, and this EMA is going to give you a clear, reducing the noise. Okay, it's going to give you a clear view, reducing the noise. So EMA is just here to guide you and also to serve as a support and resistance. Okay, look at here, all the wicks, okay, the tails that just go push past the 50 EMA and come back, push past the 50 EMA and come back again, until it breaks and pushes higher. Okay, so your role as a trader is see the most things matching at the same time. Okay, if nothing matches or almost nothing matches, it's very useless to risk your money on that kind of opportunity. Okay, because you're basically committing capital to a low quality trade. All right, so low quality trades are gonna break your account and reduce the size you can take trades with. The next study is the RSI. RSI, same concept, is an overbought and oversold oscillator. Okay, so there's two lines, two white lines, one on the top, one on the bottom, and when it reaches the top line, it hints there's a possible sell. Does it mean the sale will necessarily happen? Maybe yes, maybe no. Okay, however, it hints it, because now when I take my pen right here, 1, 2, 3, 4, 5, 6, and this one's told you a bit earlier than the others. Okay, so you now have 6 things telling us this was a sale. I would have personally committed capital if I saw this happen live. Okay. However, there's thousands of coins and you obviously cannot watch them all. So you have to select the ones you prefer or the ones that are the most volatile. Okay. So the ones that move the most to increase your chances of getting a portion of that move. The next study is going to be the stochastics, okay, which is again another range indicator. Okay, they're gonna stack up. It's not a big problem. So you can zoom in, zoom out from here or from here to watch price. So also you can move one up and down, having the ones you prefer. You don't necessarily need to use them all at once. However, it can be useful if they all tell you the same thing. Confirming you the same thing at the same time. That's what why it's key. Right here, stochastics, again, an overbought, oversold oscillator with a range. So you'll never see the stochastics go and continue up like this. Okay, it's always going to go up here, down here, up here, down here. But all of the studies here are relative. So that means it might not take the same strength to move it to the top than it will take to move it from the top to the bottom. Okay, so look at them in action. That's the only way you'll be very you'll be very agile with them, and you'll understand fully the dynamics of them. So stochastics, again, overbought, oversold kind of indicator. So when it reaches the top line, hints a buy, hints a sell, and when it hits the lower line, it hints a buy. So right now, stochastic was the last study. 2, 3, 4, 5, 6, 7. Okay, so at this time we had 7 things telling us there's a possible reversal, and it happened. Okay, so just like I said, your role or your job as a trader doesn't matter what time frame. Your goal as a trader is to identify setups of price where you have multiple things telling you the same thing. Okay, if all of this is in chaos and one of them is telling you buy, one of them is telling you sell, one of them is telling you nothing because it's just in the middle, you might want to avoid that trade. Okay, because again, reduces the odds. Basically, you're reducing your chances. So by having this setup on a couple coins, this is how you can use technical analysis to find good trades, okay, or trades that have a lot of studies telling you the same thing. Okay, so I will erase all that. I'll drop lower to show you something. The order book is what we call. So you have the bids here. So technically the sales and you have the asks here, technically the buys. So they compile into a market history, which can tell you the buys and the sales and the amounts. So you can see big amounts coming in, and you can see big amounts leaving or selling. Okay, and that can, you know, give you an idea of how volatile the market is. Okay, you got big orders, you got small orders. However, you see you have bigger orders like this one. This one is in Bitcoin, so 1.34. And you have much smaller orders. Now you could say, why wouldn't I just simply look or stare at the first page and just go, oh, a huge sale just came in. A huge sale of like 40 Bitcoins just came in. Why would I just go and do the exact same thing as that person? If that person is selling for 40 Bitcoins, I might as well, you know, follow that person, because maybe they're right if they're risking that much. The truth is, okay, and even when I say 40 Bitcoins, it's very small for a market of this size. So what people are expecting from the market history, or its market history is another word for order book, what they're expecting is to see a huge sale or a huge buy coming in. Okay, you see how orders just flow in. They're looking for a huge buy or a huge sale, and they think they will simply need to go and do the exact same order as that person. Would be very simple, right? And I think everyone would be staring at the market history, including me, for all day, because that would be so efficient as a strategy. However, the market is not built to let you know its intentions. So the algorithms behind a market order book is not built to show you the huge orders. Okay, there's two options right here. Either they won't show it because it's going to be too simple, or what most often is they will dissect a huge order into several small orders that they will distribute inside the market. Okay, so it doesn't let the traders know the intentions of the market. Okay, so you will rarely see a huge transaction into a single order. You will have several orders. That way you cannot see the huge ones and just jump in and do the same thing. Okay, don't forget that the brokers and the big players in the industry are looking to make money also, and that's the way they do. So by not letting you know such obvious information, it's like as if a huge hedge fund just emailed you when they buy a certain thing at a specific price, and with how much would be too good to be true, because you could simply do the same thing and know that there's a huge team of analysts behind that trade. So you would just jump into the same thing. So market history is not going to be very useful for us. It can give you an idea. However, I wouldn't recommend you to take trade based off, oh, there's a big sell, oh, there's a big buy here. It's going to get counterproductive very fast because you have big orders that are going to go into sales, and you have big orders that are going to go into buys, and you won't know what to do, and you will compound random trades. Okay, so what to focus on, like I said, is I'll go over what we just covered right now. The tools that are going to be useful to you to take trades, the Fibonacci as where the market could drop or rise before continuing in its original direction. Okay, the vertical trend line, it's not going to use for trades. The ray as a trend line, so when you see market trending up, you have multiple points connecting in price in the structure of the candles, and you place your line. If it does not fit, don't place it. Okay, when it, or not necessarily don't place it, but don't force a trend line if it's not meant to be there, because it's going to give you false indications. The rectangle, of course, because you're looking for a breakout of this. Okay, the horizontal line for support and resistance, because you're looking for a bounce or a break. Okay, so it's a make or break scenario. Is it going to respect that line, or is it going to break that line? If it breaks that line, you trade in that direction. If it respects that line, you trade in the opposite direction. Okay, so if there's a resistance, okay, meaning ceiling, if price breaks this resistance and pushes up, you go up. If it hits the ceiling or the resistance and starts dropping, you sell. Okay, of course, with the confluence of your other tools here, do not sell or buy blindly. Okay, so the line, I told you, it's the same thing as the ray. The segment is also the same thing as the ray, but just it doesn't continue forever. So if you want to, not put too many things on your chart, and you just want to mark up a specific zone, that can be useful. And the ellipse, you won't use it for specific trades. You can just use it to mark up, to show something in particular. Okay, to highlight a zone there. And studies, okay, again, volume first. Okay, that is by default on your chart. So you have the buyers and the sellers there, and their strength. Okay, the higher the bar, the bigger volume there is. Okay, and chances of getting moves up or down. After that, you have the ATR. Okay, a oscillator, top of the range sell, bottom of the range buy, and make sure it goes in confluence with the other oscillators, because everything here is what we call overbought and oversold indicators. Okay, so technically what they're trying to tell you is if it's to the top, it's kind of overbought, and when it's to the bottom, it's kind of oversold, so it should correct itself. Okay, so when, like I showed you, 7 things are telling you that it's probably a good sell, it is probably a good sell, because it adds on to your confluence and to the probabilities. Okay, so like I said, all oscillators right here, so make sure you trade them in confluence. And sometimes what's going to happen is that a couple of them are not going to be exactly at the top or at the bottom. Okay. However, that's you to judge if you still want to take a trade or not. So to summarize again, it doesn't matter which trend, which time frame you're on, the indicators or the studies will adjust themselves automatically. Okay, don't try to remove them and put them again. It's useless, because it just mathematical processes that will just recalculate immediately when you switch. Okay. So you can even go 30-minute, it's going to show. EMA, okay, like I said, it's a moving support and resistance. So use it as a support and resistance. If it hits, if it respects the EMA, go in the opposite direction. If it breaks the EMA, go in the direction of the break, up or down. Okay, and same thing, do not forget the Bollinger Bands right here. Okay, so I will show them again to you. You can place it like that so it's more visible. Okay, so reminding you the Bollinger Bands, okay, that are EMAs. So just like the red one right here, and reminding you that the red one is a 50 EMA in this case, right? So Bollinger Bands are a set of EMAs that, you know, follow themselves and that will act as moving support and resistance. Okay, and the middle one also. And when they contract, it means volatility is low. Okay, there's low volatility, and when they start to expand, you can see volatility picking up. Okay, contract and then expand. Okay, and big here, okay, example right here, you have a big red candle telling you it might continue down, and then you have this telling you it, but this is not telling you it. This does, this does, the RSI does also, and the stochastic does also. So here you have 4, 5, 6 instead of 7. Okay, so it's slightly less, slightly less, slightly less chances or odds in your favor. However, still shows a potential. Okay, so there's no secrets behind this. You need chart time. You need to go on the charts, place the studies, place your lines, look at it, look at different scenarios, look at different coins, and always have keep on tab the news websites, or you can choose the news websites you want. Okay, there's no you know, obligations. It's just a couple recommendations we make. So you can choose the news website you want, but keep it in case there's a good news or if there's a bad news for your specific coin or for the cryptocurrency market as a whole. All right, so now we will go back to the presentation and do a small recap. So see you there. So during this video, I showed you how to use the tools available on Bittrex, as well as the different studies or indicators available to you to use to find trades. Like I showed you, you need to find situations where you have multiple things telling you the same thing at the same time, establishing a possible good opportunities for you to commit capital. You do not need to focus only on the studies that are covered in this course. The studies or indicators that were selected in this course were selected for a reason, because they point out what we think is the most important and the less confusing. However, don't hesitate to surf around the different studies. However, the ones that are provided, okay, the 8 studies that are provided are the ones we personally use and find useful, okay? Of course, there are the horizontal lines, support and resistance, the trend lines, and the rectangles, as well as the Fibonacci tool that also helps you to take trades. And again, as a reminder, always remember that the crypto market is an event-driven market. So when there's events, good or bad, it's going to have a big effect on a specific coin or all the coins. So always be on top of your news, know what's happening, either for your specific coin or for the niche, the niche as a whole. Something you should also consider, okay, a tip you should also consider is that Bitcoin should be seen as an trust index for the whole cryptocurrency spectrum. Why? Because it is the most known and recognized cryptocurrency and accepted cryptocurrency in the world. So when the consumers are looking at the Bitcoin price, if it's falling, they will lose confidence not only in Bitcoin, but also in the rest of the cryptos. That is why when you have a down or negative day on Bitcoin, you will often have a down day for most cryptos, not only Bitcoin, okay? And when you have a up day on Bitcoin, you will have an up day on most coins, okay? So don't hesitate to review this video. I know this video had a lot of content. However, it is very important that you know that in order to take trades, take high quality trades. In the next video, I will discuss the different types of orders that are available to you. Okay, so see you in the next video.